All right, good morning, guys. Today is November 27th. This is round two because the screen wasn't showing last time. Just let me know if it doesn't show up, and I can always just reset it. So thank you, because I don't know that unless you guys tell me. So anyway, AMRN. The thought process last night was, don't underestimate the fact that they're going to raise and they're going to price at 18, whatever. That it could still go lower. And I was just kind of telling the story that. I remember KERX a long time ago. I was long biased, and they had raised it. I don't remember what the price was, but I put a lot of bias in the fact that they had raised it. Let's just call it $8 or something like that. And I just kept on buying, 830, 820, 8, 780. Like, all right, they raised it 8. How much lower can it go? And it ended up unwinding under, the 7, under 680s, and so on and so forth. So it just kind of reminded me of that, where it's a very retail heavy name, and it's very possible that things unwind. I mean, it really unwound the other day down to the 13s, and then it got saved. So this is actually really good pricing, but at the same time, depending on the allocations, depending if it's tightly held, depending if mom and pops could just get a retail an allocation. I mean, there's a lot of things that go into this, and just like, some of these crappier names, this is why, you see so many of these pop and drops, just because it goes into retail allocations rather than, funds coming in, taking stakes, things like that. So when that happens, you're going to get guys that are going to flip, and then, downward pressure. So with that said, if a lot of people think that 18 is going to hold, 18 is going to come back, whatever, and they're just kind of buying the dip because, why wouldn't you? They just priced at 18. Seems like a good idea. If that happens, and then you start to get 18 being heavy, 1780s being heavy, 1750s getting heavy, then you might start to get that retail unwind where, 1750 is sort of the trigger, 1720 starts the panic, and we have a huge washout. But that would be all well and good and great, but you got to take it one step at a time, because they could swipe this back up to 18, 1820, and the last thing I want to do is get super aggressive on the short and ruin a good 1840, 1830 average, and end up screwing up the trade. No problem with taking some covers into this washout here. It started out nicely. It's only 904, so by 920. You might see him kind of push this back up over 18, and I would actually expect that. What I want to see is it to just kind of keep on pushing, fail. The more times that it does it, the better. If it just flushes out, that's great. I'll take the trade. But I think the big money trade is in, the longer it holds, the longer it tests, the longer it looks like it actually might rebound. If the ultimate decision or the ultimate move is down after that, then you're going to have a very retail heavy stock that really potentially unwinds, just like it did, back in the panic days over here. So just keep that in mind. You also might have had like a buyout premium. There was a lot of buyout chatter, obviously on the way up, and then at 13s, everybody's like, oh, they're going to raise, and then they didn't raise, and the buyout talk comes back. So with that said, you also don't know how much of a buyout premium has been baked into the stock. And typically, if they're going to raise money, that's not really a thing that they're going to do. So that's that. That's the first one. But again, I really think that you should focus on a proper entry. If you're not in yet, still, like, my goal originally was 1820, 1840s as sort of the guide, short into strength. And look, I could be completely wrong. So if 18 starts to base and 1810s, 1820 starts to kind of do an ABCD, I'm not looking to fight it. We've got all day. Don't have to get aggressive off the open. The best trade would be a bigger picture type move rather than just a one or two candle kind of washout. That's not what I'm going for. So if that happens, then I would probably be on the cover side into that. But so far I like it. I like how it's just even shoved into that 1790s. There's a seller in there and whatnot. So, but again, I'm not trying to be too biased. Make sure you have a plan. And my goals would be ideally 1820, 1840s, and look for a trade. Other than that, ANY. I've spelled out the trade. I've got a swing on, as I've said the last few days. Traded it yesterday. I traded it pretty nice in the morning, and then I had a little bit left, and I traded the dip at the close, and I lost some back on the intraday trade. I didn't really do anything with my swing, but it's difficult to trade it intraday and really put any type of conviction into the breakout because it's such a low quality play. So, I've got to be nimble with it, and if I'm trading it, just remember that it's a low quality play. Yes, low quality plays have very high reward if and when they do squeeze out, if and when they do break out. But the fact that they could just kind of pop up, squeeze stuff, and unwind, it's a real possibility, and that's why even yesterday into the close, I really hope people take my warning seriously. But right here, I said this is a 100% avoid unless the 740, 750 start to base. And basically the reason I said that is because you've got that kill candle where we've explained this the last couple of days in the last couple of video lessons, but especially last night's. But where you've got that stuff, and sure, you can't necessarily predict this. You can assume that after 2 p.m., there, if it's not squeezing out, somebody's going to come to the bids and unwind their position. Sure, but sometimes if you predict that, you get too aggressive, you end up on the wrong side of the name, and then you end up getting in a short squeeze. So the way that you can tell is how it reacts after that kill candle. And I stress the importance of watching it because on the rebounds, does it stay stuffy? Does it stay heavy? Is there still volume coming into the offers, but they're not budging? Or does it kind of bounce up and pull back, bounce up, pull back, bounce up, like it did over here? So those are the two things that you need to be looking for. How does it react? Does it stay thin on the rebounds, or does it stay thick and keep on having lower highs, wash out, lower high, wash out, lower high, and so on and so forth? So with that said, once again, that's why I said over here you want to see it up and over if you're going to trade it again. Otherwise, it's an avoid. So you had a nice little unwind. I went over the chart yesterday a little bit in the room and whatnot, but in my opinion, even if you had the best average on a short, you're probably at best 5 or 6. If you were swinging this thing and got in a little bit of trouble and ended up coming back. So I still think that shorts are on the wrong side and probably bent by a buck or two, but I could be wrong. And again, it's a low quality play. So if you're new, avoid it. I try to provide commentary throughout the day just because it's a very good one to learn from. But it doesn't necessarily mean you need to trade it. It's good to watch it and pick up some of the vibes you can pull from it. The stuff. They're very exaggerated moves. When it ramps up and it stuffs and it slams and so on and so forth. So you can take that, see it more easily on these momentum stocks, and then apply it towards your everyday trading. So that's why I try to talk about it more on these. So anyway, AMRN, nice little shove on 18, failed so far. Then I just had a few. This VCEL, these ones are, actually, JD and AMD are the only other main watches. So AMD, higher the better. 2050s is sort of my guide. If you remember, that was the level yesterday I was waiting for. I got in a little early. I wasted a little time. Wasn't a big loss. It just was, it took my attention from other stuff. So you can see why. Just draw a line under the support levels, then it becomes resistant. So any shorts, if I short into any shoves, then I'm going to be using that 2050s as a guide. And then AMD, it was a good trader for us yesterday. I'll be looking to potentially join a trend later on, but remember 930, 932, 933. Sometimes it has some pretty good reversals, so just be cautious. But anyway, back to a few others. These are CMCM, APHA, OMI, NWL, and VCEL. Those are all just secondary watches. I just want to be familiar with the name. I'm going to have them up. If the trade comes in, then I'm prepared for it. Doesn't mean I'm watching them all to trade them all. It just means I've seen it once. Now I can react that much faster. If you just see something pop up on your scan, then you kind of have to get familiar with, okay, what's the deal here? What's the story? Okay, what did it do yesterday? But if you're prepared, then you take all that out, and then you can just react when you see it. So, at any rate, CMCM yesterday had that fraud article. It had a nice little sell-off so far. The reason I'm really interested is you can see this chart support. If this thing breaks and stays under 8, then there's a good chance that it could go 750, 7s, and maybe even lower. And this is known to have those types of candles. So that's why that one's staying on. VCEL has a perfect breakout chart, but if it fails, that can come right back down to the 1650s. So I'm going to be watching that one. Yesterday we had OMI, which totally unwound, and it squeezed out into the close. I was fortunate to short into basically this pop here, and I covered right over here, right when I said in the room 754, which was very fortunate because it just never looked back. But what I expected was, I had leaned some over here and I put some on over here. I think I had about a 749, 750 average or something like that. I lost 4 or 5 cents. But the reason, when SSR, you have to expect that it's going to rebound. But then when it fails, it should kind of fail again. When it doesn't, and you start to see higher lows, you've got to take note and realize that. So that's what I did, and it was a pretty good cover. But it's on watch today. It was 730s, 780s on the close. So any push towards 8, definitely a radar for me. Then I said APHA. This was another unwinder yesterday. Higher the better. Look for some backside activity. So other than that, I'll see what the scanners give. My main focus is going to be AMRN, like I said. Any, I'll probably be flipping. AMD, JD, and then just keep these other ones on back radar. And NWL was the only other one that was on that watch as well. So nice big move yesterday. This can continue to break out, but as soon as this squeeze ends, this is known for some pretty nice pullback candles. So that's why I'm keeping it on radar. I'm not crazy excited about it, but I know that it should stay on radar. So that's my plan for this morning. I will go ahead and stop the recording. I can answer some of your other questions now, and then we'll get ready for the day.